Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing language of corporate filings with a bit of a smirk and a whole lot of clarity. Today we are diving into PG, a giant in the consumer goods world, and getting a peek under the hood of their recent quarterly report. Think of this as your cheat sheet to understanding exactly how this consumer giant is performing right now. And make sure you stick around because we are going to uncover some really interesting insights. Before we jump in, if you love getting straight to the point analysis of these corporate documents, make sure you are subscribed. And hey, we have a fantastic community over on Discord, all linked down in the description, so come say hi. Alright, so what exactly is this document? Well, it is a quarterly report for the Procter and Gamble company. It's like a progress report card for the 3 months ending the 31st of December 2025. Think of it as a snapshot of their financial health and business goings on. Let us start with the big one, the earnings statement. For the 3 months ending the 31st of December, our friends at P&G posted net sales of roughly $22.2 billion. Now that is a lot of zeros compared to the same time last year. That is a slight increase. Their cost of products sold was about $10.8 billion, which means they're spending a good chunk of that sales money just to make their products. Then there is the selling, general and administrative expense coming in at around $6 billion. This covers marketing, advertising, all the costs to get their products into your hands. When you put all that together, their operating income for the quarter was about $5.4 billion. That is the money they made from their core business operations before considering interest and taxes. This section tells a similar story, but also includes things that are not always part of the main earnings, like changes in foreign currency exchange rates. For the same quarter, their total comprehensive income was around $4.3 billion. Now, for a look at what they own and what they owe their balance sheet as of the 31st of December 2025, they have total assets amounting to about $127 billion. That is a massive number. Assets are basically everything the company owns, everything of value. On the other side of the ledger, their total liabilities are close to $74 billion. Liabilities are what the company owes to others. So when you subtract what they owe from what they own, their shareholders' equity is about $53 billion. That is the stake the owners of the company have in it. Looking at the current assets, they have about $26.5 billion in things they can use quickly, like cash and money owed by customers. This table gives us a peek into the changes in PG's equity over time. For the 3 months ending the 31st of December 2025, we see changes due to net earnings, dividends, and stock purchases. It shows how actual money from profits and how much was paid out to shareholders. This is a super important one, the statement of cash flows. It shows where the company's cash came from and where it went. For the 6 months ending the 31st of December 2025, their operating activities brought in over $10 billion. That is the cash generated from their normal business operations. When they buy property and equipment, that is investing activities, and that used up about $2.7 billion. Then there is financing activities like how they manage their debt and pay dividends. This section used up around $6.3 billion. So this part is basically the fine print explaining how they put all these numbers together. They state that these financial statements are prepared according to generally accepted accounting principles in the United States. This is where we learn about P&G's different business divisions. They organize their business into 5 main segments: beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. For example, their beauty segment includes hair care, personal care, and skincare brands. Their fabric and home care segment has beloved brands like Tide and Dawn. Let us talk numbers from these segments. For the 3 months ending the 31st of December 2025, P&G's fabric and home care segment brought in the most with over $7.6 billion in net sales. Following that is the baby, feminine, and family care segment at about $5.1 billion. It is good to see where the money is really coming from. This section talks about goodwill, which is essentially the value of a company that exceeds the value of its identifiable net assets. It is a complex accounting concept, but essentially it represents brand reputation, customer loyalty, and other intangible factors. P&G has a significant amount of goodwill, about $41.6 billion. Also, they have significant intangible assets like brands which total over $21 billion. This shows the immense value of their brands in the market. This is how they figure out earnings per S-Hair, basic and diluted. Basic earnings per S-Hair is just the net earnings divided by the number of shares outstanding. Diluted earnings per S-Hair takes into account things like stock options and other convertible securities that could potentially increase the number of shares. For the 3 months ending the 31st of December 2025, their diluted earnings per common share was $1.78. Here we see how P&G manages financial risks. They are exposed to things like currency exchange rate changes and interest rate fluctuations. They use financial instruments such as interest rate contracts and foreign currency contracts to manage these risks. Their fair value of long Term debt was around $31 billion as of December 2025. This section reveals they announced a significant restructuring plan in June 2025. They are expecting to spend between $1.5 and $2 billion over 2 years to streamline their business and organization. This includes a plan to reduce up to 7,000 non-manufacturing overhead employees. This is a pretty big move to cut costs and become more competitive. Now we get to management's own discussion about how the company is doing. They talk about forward-looking statements, which are basically educated guesses about the future. The company acknowledges risks like global economic volatility, currency fluctuations, and competition. They are clearly aware of the challenges in the market. Going back to sales for the 3 months ending the 31st of December 2025, net sales are up 1%. This might not sound like much, but for a company this size, it is significant. They attribute this to favorable foreign exchange and higher prices. So basically, they got a little help from currency exchange rates and they managed to charge a little more for their products. Looking closer at the breakdown of sales changes for the 3 months ended the 31st of December 2025, the beauty segment saw a 5% increase in net sales driven by unit volume price and foreign exchange. This is a strong performance. On the other hand, baby feminine and family care saw a 3% decrease. Their operating income decreased by 7% for the quarter. This was driven by a drop in gross margin and an increase in selling general and administrative expenses. So while they sold a bit more, they also spent more to sell it, and their profit margin on each sale went down a little. For the 6-month period ending the 31st of December 2025, their net sales increased 2% to almost $44.6 billion. Net earnings for this period went up 5% to over $9 billion. This shows that even with some cost pressures, they are still growing and becoming more profitable overall. For the 6-month period, the beauty segment showed the strongest growth at 6%. Fabric and home care saw a more modest 1% increase. In terms of net earnings for the 6-month period, beauty and grooming segments saw positive growth, while healthcare, fabric and home care, and baby feminine and family care saw slight decreases. Let's dig into the beauty segment. For the 3 months ending the 31st of December 2025, net sales increased 5%. This was a good quarter for beauty, driven by strong unit volume pricing and favorable foreign exchange. Their net earnings here decreased slightly by 2% though, due to higher costs. In the grooming segment, net sales increased 2%. However, net earnings took a hit, dropping 9%. This is a key area to watch for P&G because while they are selling a bit more, they are making less profit on it. The healthcare segment delivered a solid 5% net sales increase for the quarter. Net earnings also grew by 2%. This segment seems to be performing quite well and is a stable performer for P&G. For fabric and home care, net sales inched up 1%. This segment is a bit of a mixed bag, with some product lines doing better than others. Net earnings here decreased by 3%. This segment saw a 3% decrease in net sales for the quarter. Baby care net sales were flat while feminine care increased slightly. However, family care, which is mostly in North America, saw double-digit sales declines. This is likely due to shifts in inventory and pricing strategies. Net earnings here dropped significantly by 9%. The corporate segment, which covers activities not tied to specific segments, had a net loss of $161 million for the quarter. This was mainly due to those restructuring charges we mentioned earlier. For the 6-month period, the corporate loss was smaller at $125 million. Let's talk cash. For the 6 months ending the 31st of December 2025, P&G brought in a very healthy $10.4 billion from operations. This is a good sign, showing their core business is generating plenty of cash. They define adjusted free cash flow as operating cash flow minus capital spending and excluding certain tax payments. For the 6 months ending the 31st of December 2025, this figure was $8.7 billion. This is the cash they can use for dividends, share buybacks, and other investments. Their adjusted free cash flow productivity was 95%. This means they converted almost all of their adjusted free cash flow into actual cash, earned a really strong indicator of financial health. P&G also tracks organic sales growth, which excludes the impact of currency changes and acquisitions or divestitures. For the 3 months ending the 31st of December 2025, their total organic sales growth was flat. However, segments like beauty and healthcare showed positive organic sales growth. This is important because it shows the underlying health of their product sales, independent of external factors. Now let's look at core EPs, or earnings per S hair. This excludes certain one-time costs like those restructuring charges. For the 3 months ending the 31st of December 2025, their core EPs was $1.88, which was unchanged from the prior year. This shows that if you ignore those big restructuring costs, their core earnings per S hair held steady. For the 6-month period, core EPs increased 2% to $3.87. This section reassures us that there have been no major changes in how P&G manages market risks. They are still keeping an eye on things like currency and interest rate swings. This is a standard part of these reports where the CEO and CFO confirm that the company has effective controls in place to ensure accurate financial reporting. It is basically a sign of good governance. P&G has a share repurchase program. During the quarter, they purchased about 15.5 million shares of their own stock. This is a way for companies to return value to shareholders and can signal that management believes their stock is a good investment. So what is the big picture here? P&G shows resilience. Their sales are growing, albeit slowly in some areas, and their core operations are generating substantial cash. The restructuring plans indicate a strategic move to cut costs and sharpen their competitive edge, which is a smart move in this crowded market. However, we see some pressure on profit margins in certain segments like grooming and baby feminine and family care. This suggests they might be facing increased competition or cost inflation that they cannot fully pass on to consumers yet. The strong performance in beauty and healthcare is a positive sign of robust brand strength. Overall, P&G appears to be navigating a complex economic landscape effectively by balancing growth initiatives with cost management. They are definitely a company to keep an eye on as these restructuring efforts play out. Alright, that is our deep dive into the Procter & Gamble company's latest quarterly report. What do you think about these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And remember to check out the Discord in the description for more great discussions. Thanks for watching. See you next time.